Again, just want to do a quick video on fascination fixation. Just staying fascinated on one chart, one time frame, fixated on those candlesticks, and just interpreting them in a way that's not helping you, your trading, or your account in any way, shape, or form. And basically, this is what a lot of guys do. When you're looking at a trade, you got into a trade, you jumped into a trade, and now all of a sudden, all you see is your chart like this. First of all, you have it all the way up to the right edge, and then you're zoomed in to this point where all you see is these candles, and then you see one spike like this, and you're like, oh my God, Amazon, SPY is breaking out, SPY is breaking out, SPY is breaking out, when in reality, it only moved a couple of cents. And this is the 1 minute chart, because I know a lot of guys love to use the 1 minute chart or the 5 minute chart and under. I personally don't, because you get all of this chop, all of these wicks, and it makes you think that it's actually doing something, especially when you get these candles, when in reality it's not doing anything. So if you like to use the 1 minute chart and you like to watch this, I would definitely recommend that you actually zoom out so that you can see the bigger picture. And if you enter on a 1 minute chart, manage on a 5, manage on a 10, so that you can, manage on a time frame higher than the one that you entered, so you can see the bigger picture. It's important for you to zoom out and actually see what's actually going on, because you may think that it's moving, but it's actually not doing anything at all. And I personally like to have my chart extended to the right. I want to see where it could potentially go, up, down, and in case I want to draw maybe a trend line or something, I kind of want to see where that trend line actually hits. So I don't like having my chart all the way to the right like this, because for me, that's just a pain. That's painful to watch, because it's like, oh my God, it's just, for my personality and style of trading and emotional control, I cannot have my charts like this, because it's just, I cannot properly see it for myself where we might potentially be going. So I like to have my chart extended to the right, as many bars as I'm comfortable with, for that reason. But let's go ahead and zoom out even more. When you zoom out and take a look at the 30-minute chart or the hourly chart, you actually get to see what actually is going on. And then obviously having your daily charts up. You definitely want to have your daily chart so you can get a sense of the overall picture of where the market is going. Is the market trending up right now? Is it at a reversal point? Is the reversal actually working? I want to see all of that. You need to make sure you zoom out and see the picture. See what's actually going on, so that you don't get caught in chop, so that you actually recognize that it's actually chop, and you can say, you know what, I may need to get out of this because this is actually not going anywhere or it's not doing anything. And because you zoomed out, you can actually see, hey man, look at this big massive spike here. It was from 293 to 94 to 294. It's a dollar move. You know what I mean? I like to use the 10-minute chart. But this is actually a lot better on the 5 minute compared to the 1 minute chart, because you can see it more clearly on what's actually going on, as opposed to just keeping an eye on the 1 minute where you have these constants up and down, up and down, up and down. Here you get a more clearer picture, and definitely on the 30-minute and higher, you're going to get a better, clearer picture. On the daily, you can clearly see that this thing is just moving sideways. It's just a choppy day, and if you didn't make your money by 9:50 today, you are stuck in chop for the rest of the day. And that's pretty much it. So I just wanted to remind you guys, don't stay fascinated and fixated on one chart, zoomed in to the point, because it's like, oh, let me see what's going on. Zoom out. Take a look at your market internals and see what the markets are actually doing, so that you can determine whether, this is a good day to be trading or not. So for example, for today's example, I know it was a bad day. So if you weren't out by 9:50 today, you're done, because look at what the tick is doing today. Pretty much staying around zero, staying between 500 and minus 500 and not doing anything. It's not hitting the extremes. So after the morning session, it was over for the day. And this is pretty much what you've seen throughout the day. The markets are just going sideways. So no matter what, if you jump into anything, unless you're a scalper, you're pretty much stuck in a lot of trades today, unless you found something with a lot of volume, which we did, they're very few in between. I know Ulta has 124% today, so let's see what kind of move Ulta did. And there you go. Ulta was an awesome, awesome mover today. Awesome for the breakout strategy, for the boxing strategy, and you would have made a nice chunk of change today on Ulta. And you would have seen this volume today very early on. As you can see here, it's at 124%. So if you don't have the volume column set up on your watch list on Thinkorswim, make sure you grab a copy on the links below. But look at this. You would have caught this one early. Beautiful box in because you could have boxed it in with the pivot here. And then when you saw that the volume was over 20 or 30% right in between in the first 5 minutes, you could have easily taken this trade short. And look at this beautiful, beautiful ride. You could have taken some trades, some profit here at the first pivot. And then based on the daily, as I explained on the last video, day trader with swing intentions, you could have held a couple of contracts over. Now that you have this massive dump, you can say, okay, now I can target my daily targets, my daily support targets based on that. And actually, you know, it would have hit the first one here at this 50 MA at 344 today. And then you could have, if you still have more, you could have targeted the next level, which is probably going to be your 320 area here, followed by the 300, 305 area down here. So as you can see, this is a perfect example. You would have caught this one bright and early if you would have had it up on your watch list, because you would have saw that volume. And on a choppy day like today, this was one that you would have been alerted to early in the morning because the volume started to come in early. So that's pretty much it, guys. Hope you guys enjoyed this video. And just remember, don't stay fascinated or fixated on any given chart. Make sure you zoom out. Watch your market internals. Watch what's actually going on today throughout every single day so that you can take advantage of these market moves, okay? Have a great day, guys, and I'll see you guys in the next one.